Tech Dev tweeted this. And I think this is interesting because this shows history repeating. And this relates to DXY, which a lot of people are paying attention to. That's the dollar index, the US dollar versus other currencies. Also looking at USDT, which is Tether, stablecoin dominance, and looking at RSI. So you're combining all these things together. What do you conclude from it? Well, when DXY starts going down, that's the yellow or orange. When DXY goes down, that means great things for Bitcoin, crypto, equities, everything, because that shows that money is coming out of bond and treasury and notes, basically, and going into investments like crypto and like equities, right? So right now, what we're seeing is, yes, DXY is coming down in a big way. So that's number one. That's good. Also, you look at something like RSI, which just shows Bitcoin, first of all, is very oversold. And also, it's in a bearish divergence, which actually speaking, it sounds bad. But if you look at last time this happened, Bitcoin went on a tremendous run. Also, you look at USDT dominance. When stablecoin dominance starts going down, what happens? Just like DXY, just like dollars getting out, USDT, when that dominance goes down, that means stablecoins are getting out and people are using them to buy things like Bitcoin and crypto, obviously, right? So looks like history is repeating, and that's a good thing. That's a good thing. And obviously, Bitcoin follows what this other show is the 4-year cycle. Of course, Bitcoin follows that. Leading up to a halving event, Bitcoin usually has a good recovery, and afterwards, it has a great, great run, right? So we're getting to that point where we are coming up to the next halving event. We're going to start seeing that recovery. So that is also something that is fantastic. So Bitcoin dominance is now below 38. So I decided to pull it up, and this is what it looks like, right? This is another indicator why our current environment is very different than previous environments or previous cycles, however you want to look at it. You look at back in 2013, well, you could go back to 2011, all the way back to 2017, before altcoins really started going up. Bitcoin dominance was above 70, 80%. That's how high Bitcoin dominance was. Okay, and then we had a couple bull run where altcoins really shot up and Bitcoin dominance went back down to about 39%, but always came back up during the bad. So during 2018, right, 2019, 2020, what happened? Look at Bitcoin dominance here, going up to 60%, and then eventually it peaked at 69% or 72%, okay? And that's the beginning of 2021. So we know that 2021, then we kicked off and we had one of the most tremendous runs ever, right? But, since then, Bitcoin dominance has been slowly tapering down. So you could see we had a few peaks where it went back up to like 45, 46, 47%. But, overall, it is trending down, right? And what's my point to this? Well, number one, it's very different because a lot of people will still say, well, Bitcoin dominance goes shoot right back up again like it has done before. I don't think that's going to happen because of the strength of altcoins. And the reason why the altcoins are so strong is because there's a lot more utility. There's a lot more staking. There's a lot more DEXs and bridges and liquidity pools and synthetic tokens and everything else that's in the space that people are using and holding. And let's not forget NFTs. People are also holding NFTs as well, right? So the space definitely matured a little bit. And there's definitely a lot more use cases now versus before. You go back to 2017, 2018, what did the altcoins do? Absolutely nothing. Nothing at all. Barely any staking, barely any DEXs that were operational, let alone ones that was capable of even making trades. The liquidity was so bad that no one dared to use them. The slippage was so bad. And then the number of wallets out there, the number of dApps out there just was not anywhere close to what we have now, right? So overall, I think this shows the industry growing, even though, yes, everyone just looks at a price, and I know the price is lower versus the previous highs, but you can't argue that adoption and growth is still happening in an entire space, right? So that's kind of what I want to show you guys. But of course, Bitcoin is still the big dog, and I still think it's very, very different than all the other altcoins because I think it's the only store of value that we have, and everything else is more like a utility or aka security, because that word is very popular these days. But you know what? There are a lot of people that still continue to believe and continue to accumulate, and HODL and DCA. That's good. That's all good. I showed this chart actually, I think yesterday. It's very similar. But this shows a number of people holding Bitcoin from 0.1 to 10. Okay, there's a big gap there. 10 Bitcoins is very hard to get to. A lot of people are aiming for 1 Bitcoin, which is great. But 10 Bitcoin is beyond most people. But you look at it overall, look at that. Look at the right side here. Look at how it's skyrocketing right now. Skyrocketing. While prices are low, people are taking advantage, buying the dips, and realizing this is a great, great time to be getting in or DCAing even more, right? That is a huge, huge climb. Huge climb. So it shows you not everyone is panicked. Not everyone is getting out. In fact, there are a lot of people getting in and jumping more in. And, of course, we have institutions that are also buying by the boatload behind the scenes via OTC market, right? So we are seeing a lot of that. India is starting to pilot CBDCs. You know, the New York feds are doing this already in the U.S., but you're starting to see this worldwide. I don't know if this is actually good for crypto, but it does show that its use case is growing. So even central banks around the world are starting to pilot digital currencies on top of a blockchain ledger. So I think that overall is good. But as for whether or not decentralized banks or governments are going to start cracking down on stablecoins in favor of their CBDC, well, that is probably not so good and probably going to happen. So I guess we'll see. What else is there? Hut8 is having some kind of energy dispute right now. So they have shut down some of their mining machines because some power company is not providing enough power to them, and then they claim that Hut8 is not paying their bills. So it's something to worry about, or something to watch at least, because we don't want to see miners start selling off their Bitcoin, because right now it's pretty unprofitable for them. But Hut8 has reported that, they're just sticking with everything they have. Their last quarterly result shows they have added more Bitcoin to their balance sheet. They don't look like they plan on selling off anytime soon, nor do any of the other miners that are publicly traded. They all came out with quarterly reports showing that they've added Bitcoin, not sold off Bitcoin. So they're all, it's like a race, right? Race to the end to see who can accumulate more Bitcoins. That's what they're all doing right now. And then lastly, I did see a lot of you guys are Fantom fans. Fantom has gone up quite tremendously the last two days. So I was wondering why. I did see this. Andre Crony, who's back at Fantom. There's actually a big Fantom conference that's coming up in January, I believe. But he released articles showing that Fantom is positive cash flow. I guess that's good. So they're not negative. They don't need to sell off tokens to survive. They're actually doing pretty well. Also, there's a lot of other things. They just got added to Ledger. Obviously, a lot of you guys started learning about Ledger and learning about how to take control of your own crypto. So Fantom was just added officially by Ledger, so that's pretty fantastic. And there's a lot of other stuff that's going on, right? So Fantom has been big in DeFi for a long time, and with Andre Crony back, it seems like they're going to continue forward with DeFi and possibly leading the way. All right, so we're getting a lot of U.S. economic data, and this is important. So today, you see there's consumer confidence, which should be coming out in about a half hour. Home price index, a couple of them. But then you could see on Wednesday, We're going to get a lot. Job openings, quits, ADP employment report, pending home sales index, all this stuff, right? And then Thursday, we continue on with even more retail spending, core PCE, jobless claims, right? So a lot of economic data, okay? And why is this important, you may be wondering? Well, it's important because everyone wants to know what Fed Powell is going to do in approximately 2 weeks, okay? As the data comes in, is it going to force him and other board governors to make a change, to make a pivot? And that's what everyone is waiting for, a pivot or some kind of softening language, which actually did appear during the last meeting, but maybe more so this meeting, okay? Because we did have a big boost from CPI reading, which showed core inflation tapering out. It went up, but it's tapering out. And overall inflation going down. Are we going to see the same thing again? And how are these economic data, how are they going to affect things? Are they going to show, a slowness, which is what we want, right? We want to see slowness, not a collapse. If it shows that the U.S. economy is collapsing, well, that's going to be bad. But if it's simply showing slowness, softening, these are good things. That's what Powell wants to see, because with the data showing there is a softening or slowness, that means whatever he's doing is working and should be bringing inflation down. Okay, so that's why this is important. But starting today, moving tomorrow and Thursday, I think we're definitely going to see some volatility. And it doesn't mean that it's bad volatility, but we're definitely going to see something. But right now, it's predicted that the next rate hike that's coming in a couple of weeks is going to be 50 basis points, at least according to CME prediction. I don't know how they come up with this prediction, but 67.5% chance that it's going to be 50 basis points rather than 75. Although that 75% is going up because it was below 32.5 before, and now it is at 32.5. So there's still a lot of people who think that Powell and his buddies will still raise rates by 75 basis points. So we will see. Okay, so I want to start out with that. Also, there's a lot of talk about what's going on in China, obviously, right? With a lot of protests that happened over the weekend. And this is due to the COVID lockdown, the zero policy that President Xi has implemented, and people in China do not like it. Of course, you have cities being shut down, manufacturing just halted, right? Obviously adding to supply chain issues around the world. And we were just getting to the point where they were opening up, supply chain issues are being resolved, right? And in a way, it's helping bring inflation down. But now there's more stricter rules because COVID is going up in China. But, I saw this. COVID infections drop for the first time in more than a week. So that's positive, right? Will President Xi soften his stand on the zero policy that he has implemented? Probably unlikely. But, a lot of people are eyeing China to see what they're doing. Are they going to ramp up their production, their manufacturing, their shipping? Or are things still going to be bad for a while, right? But if it turns positive, that could definitely help bolster economies around the world and help bring down inflation. So, good stuff. Good stuff if it happens. Also, there's a lot of talk about free speech these days. Elon basically pointed fingers at Apple yesterday, and specifically at Tim Cook, about censorship, about free speech, and how Apple doesn't like it, doesn't want it. Elon is pointing finger directly at them because there's talks about how they want to ban Twitter from the App Store. And also they stopped their advertising and stuff like that. So there's a lot to talk about there, but I don't know what Apple's going to do. Obviously, you can't just ignore Elon. And Tim Cook uses Twitter quite often, so we will see if he's actually going to make a move. But Elon is definitely poking a bear, and some argues this is a good thing because he's fighting for free speech. And then I saw this headline out of the UK, which actually is pretty surprising. There is a new bill that's being circulated that will actually now remove this requirement that big social media giants like Facebook, TikTok, and Twitter will have to take down content that is deemed harmful content, legal but harmful. Before, they are required to just take them down. But now there will be just like a disclaimer or something like that, so they don't have to take it down. And the lawmakers in the UK are saying, well, this is because we want to protect free speech. Interesting. Usually with government controls, you don't see this happen. It usually tightens. It doesn't loosen. I don't recall the last time I've seen laws being loosened up, especially when it comes to controlling the population, right? Using media or using laws to control what is said, that usually only gets tighter. It doesn't get loosened. So this is actually surprising. I don't know if this is going to get passed, but I saw this. I'm like, wow. Very surprising. Very surprising indeed.